What's up, apes? Welcome back to the Daily Peels video stream / podcast of the day. My name is David. Thank you all for joining me once again here on this beautiful Monday, June 24th, 2024. It is 7:43 p.m. Let's go ahead and get ready for the ticker tape tomorrow. So first of all, we got to talk about the WSO Alpha portfolio because yesterday was a bit of a rough one. We lost 20 basis points for the session, but it was literally nothing compared to the humiliation and suffering that the NASDAQ index levied on its holders. So that index was down 55 basis points for the session. Meanwhile, the S&P 500, it was down for most of the day, but they had a strong uptick late in the session and ultimately finished up about 5 basis points. So nothing too exciting there. We are still underperforming both indexes for the year, but not by too much, especially not too much by the NASDAQ anymore. The Dow was up 73 basis points, not that anybody cares. The Russell 2000 up 92 basis points. So small caps were actually leading the day with NVIDIA plummeting like a rock. And we'll talk about that more specifically in just a quick second. But guys, remember to go ahead and sign up for the WSO Alpha portfolio. We have a new research report that's going to be dropping towards the end of this week. It's going to be an interesting one, and I expect a whole lot of hot takes out of the community. So make sure at the very least to be joining our Discord because it is completely free. I'm dropping a link in tomorrow's edition as well as we do, roughly weekly. You can also find the Discord on our social media channels. I've been trying my best to figure out how to make this Discord link actually so it doesn't expire. They have a little check mark button that you can check to do it, but it doesn't seem to be working. Never mind, whatever. Just click the link tomorrow and you'll be good to go. Anyway, let's go ahead and get into some of the banana bits for this session. So first and foremost, we have a chart for this first banana bit here. What you're looking at right there is the S&P 500's aggregated PE ratio, or price to earnings ratio, basically showing how expensive $1 per earnings is according to the current market value of the index. So what we're seeing right now is that it has absolutely skyrocketed since the about summer of 2023, towards the beginning of 2023. We are now back at 25.1. As you can see, this black line right here is the average since about 1988. And so we are well above that. Now, we're not quite at 2020 levels just yet. We are surpassing 2021 levels right now. So it's getting into that kind of fear and greed territory at this point once again. We'll see if it actually plays out like that. But I mean, when you have a company like NVIDIA that's run up more than 1,000% in just the past couple of years, or past couple of really year and a half, and they control, I think they're about 6.5%, 7% of the index right now, third largest company in the world. Briefly, we're the first largest. I'm stepping on our content. We'll talk about this in just a minute. Let's go ahead and move on to the rest of the banana bit. So demand for travel shows absolutely no signs of slowing down. Business travelers are through the roof, and that's boding very well for leisure companies like hospitals, like rental car services, like maybe not rental cars, but what's that shit called? Like chauffeur services, I guess. Either way, it's great for the economy to see travel continuing to boom so much. Not so great when you're flying on a plane made by Boeing, but still, nonetheless, it is still great to see that people are out there spending money, especially on the business travel side. That is incredibly important to all of these airlines. And so if they can keep themselves afloat and we don't have to bail them out like fucking 2008 all over again, that would be an ideal situation. Anyway, Disney's Inside Out 2 could be the first blockbuster movie of 2024. What do I mean by blockbuster? I mean $1 billion in gross box office revenue. Analysts are loving it. They upgraded Cinemark stock largely because of that, or saying that the box office slate is looking good for the rest of the year. I don't know any movies that I'm excited about right now. I mean, Civil War was a huge fucking disappointment, to be honest. But let me know what's coming out later this year that should be on my radar, because honestly, I'm super underwhelmed, or maybe I just am out of the loop. So we'll all stay tuned for that. And then finally, Europe. The continent is a goddamn museum, but they are trying to regulate Apple with their new, I forget what it's called, digital act. But effectively, this is some huge antitrust legislation against Apple. They're basically saying that the company's disallowance of alternative payment methods outside of its app store is against this legislation that the EU has passed. So naturally, Apple, the stock barely even reacted to the news because they're probably going to throw a $10 billion fine, which is going to sound huge to the European and American publics. But, we all know it's Apple. It's not going to matter whatsoever. Yeah, the stock was up 31 basis points for the session, so nobody cared at all. But this could be the first sign of changes coming for the Apple App Store and the end of their imposed monopoly. Let's go ahead and move into the macro monkey story of the day. Guys, not a whole lot of important news going on. The PMI was the most important thing of the day, and that is boring as hell and doesn't matter whatsoever, so I'm not talking about it. We're going to talk about something a lot more fun, and that is, of course, the NBA's streaming deal. So this was a banana bit recently, but there's $76 billion on the table with NBA negotiations right now between just three broadcasting providers. And those three providers include ESPN, aka Disney, NBC, and the big dog Amazon. So Amazon already dominates the football market, or dominates. They have exclusivity access to Thursday Night Football for the next, I think it's an additional 8 years from now. They're paying $1 billion a year for that. We'll talk about that more in-depthly in just a quick second. But we already know, I mean, the Boston Celtics, what else can you say? They just solidified their position as the #1 best franchise in NBA history with their 18th championship title, the most of anybody else. Franchise values are exploding, including the Celtics and many other organizations around the league. But what's really exploding more than ever is the league's revenue. So what we're looking at here is NBA revenue over time. We're starting back in 2001-2002 season, and we're finishing up with 2022-23. So this would be higher, 2023-24, but apparently Statista doesn't have those numbers right now, whatever. But they made $10.58 billion last year in 2022 and 2023. So this deal right here at $76 billion over an 11-year period implies about $7 billion per year from three providers alone. And that is purely broadcasting streaming rights. So it's about 150% growth compared to the streaming rights that the NBA was commanding last year. So this thing is absolutely exploding, and it's not really any secret why. The reason, to get specific about the deal here for a quick second. So the $76 billion over 11 years, it's kind of getting into the minutia, but just so we can understand exactly what's going on, Amazon is going to be shelling out $1.8 billion per year for the rights to many regular season games, playoff games, and that abomination of an in-season tournament that literally nobody on earth cares about. If the Celtics won, I would care, but because the Lakers won, I fucking hate it. So obviously that doesn't matter at all. Anyway, NBC is going to be shelling out $2.5 billion per year. They're paying a lot more because they're securing more playoff games and, you know, more exclusivity. They're going to be streaming about, they have exclusive streaming rights to 50 games per year. They'll be streaming 100 regular season games. 50 of those are going to be exclusive to only Peacock. Hopefully they get some good games like the Christmas Day ones or something like that for that much money. Meanwhile, ESPN, aka Disney, is going to be paying $2.6 billion per year for similar rights and securing access to streaming the NBA Finals on ESPN Plus, Disney's DTC app that's going to be launching in 2025. So a lot of big money being thrown around. That's a total of a very nice $6.9 billion per year. Once again, a 150% increase in broadcast value. Now, traditional companies, you guys might know TNT. NBA fans definitely know TNT because that's been the biggest provider of it for the past couple of decades. But TNT is unfortunately owned by Warner Brothers Discovery. Warner Brothers Discovery is unfortunately run by an idiot named David Zaslav, who has done this to the company's balance sheet. So what you're seeing is absolutely skyrocketing amounts of debt. Now, they have been able to pay it off, fortunately, because a lot of that debt was brought onto the balance sheet before the Federal Reserve's rate hikes. So they've been able to keep their net interest expense negative, meaning that they're earning more on their cash than they're paying out in interest on their debt. So it hasn't been too terrible, but you're not throwing out billions and billions of dollars in broadcasting rights in order to secure streaming properties when you have this fucking problem to deal with. $39 billion in revenue is still, or not revenue, in debt is what they're still currently sitting on, which is just an abomination for a company like Warner Bros. Discovery. It's like half their fucking market cap. But either way, the remarkable thing about this is, one, how much it's exploding. Two, its comparison to something like the NFL. So $76 billion over 11 years sounds like quite a lot of money. But if we do some back-of-the-envelope math, essentially what we get is they're valuing an NBA regular season game at $2.8 million. Worth about 30 times that is what Amazon is valuing a typical Thursday night football game at. Now, Thursday night football, it is a pretty big event, so it kind of makes sense. Like, it's like a weekly holiday during NFL season. But again, it's just regular season games, which are valued at about $58.8 billion in any given season. So we're seeing about a 20 to 30% premium, 20 to 30 times premium, on NFL games over NBA games. This makes sense for a lot of reasons. NFL games are watched by a whole lot more people than NBA games, and part of that reason is because there's almost 10 times as many NBA games played in any given season. So part of this kind of makes sense. There's going to be 2,460 NBA games played in any given season, 272 NFL games. So that difference in price, I mean, you would expect the NFL in that case to be at, $2.8 billion if we're working off the NBA's number of, you would expect the NFL regular season or Thursday night football games to be valued somewhere around $28 million if we're going off the NBA's $2.8 million valuation. But obviously NFL has that premium. It's America's game, so we're not really too surprised on that. But the big takeaway here is that cable is absolutely dead. No companies like Warner Brothers, Discovery, none of them can manage to throw out these big bucks. The only ones that really can are the Disneys, NBC, who is owned by Comcast and who is getting who actually recently got a fat paycheck from Disney for selling their stake in Hulu. So that helps solidify their balance sheet. And then obviously Amazon is fucking Amazon. So they can do whatever the hell they want. But it's really slimming the amount of bidders who can actually afford to be streaming this stuff. So, don't expect the other cable news companies to be trying to get in on this at any time soon. This is really it. I mean, it's like the last leg that cable has been able to stand on is enrage-baiting news and sports. And, Don Lemon left CNN, Tucker Carlson left Fox. So that's clearly on its way out, and so are sports. So cable TV, I mean, their audience is literally dying off. It's made up of people who eat dinner at, 4 o'clock in the afternoon and think streaming means there's something wrong with their plumbing, for Christ's sake. So it's no surprise. It's tragic that they're dying off, of course, but for these cable companies, they've had at least a decade to pivot and not fall victim to the innovator's dilemma, but nonetheless, this is exactly where you end up. So anyway, let's move on into some of the big stock movers of the day. All right, so speaking of politics and division, and most importantly, political persecution, Trump Media and Technology Group was absolutely popping off on the day. Traders apparently have become traders over the past month because this stock is down quite a bit. It's lost like 30% over the last month or so, but on Monday it was up 21.19%. And that was largely because there was absolutely no reason whatsoever. I mean, it's probably because it fell off and Trump supporters were like, yeah, let's buy this thing. This is fucking debate this week. Let's fucking rally the troops. There's really absolutely no reason whatsoever unless they're excited at all of the dilution that they're going to be facing. The stock is falling faster than Rudy Giuliani's reputation. So I don't really see what the argument is here to be buying this stock. I mean, I guess they did make an entire $3.8 million last year. I bet you Wall Street Oasis made more money than that. I don't actually know what we made in 2023, but probably more than that. Either way, let's go ahead and move on to an actual company for our next mover of the day, and we have Affirm Holdings. Affirm has been playing with the big boys lately. They've been buddying up or, rubbing shoulders with some Wall Street royalty, and that continued on Monday's session. They were up 12.8% because analysts at Goldman Sachs upgraded the stock to a buy. They initiated their coverage, not upgraded their coverage, but they slapped a buy rating and said that there's potential for 40% upside since the company's partnership with Goldman to incorporate its buy now, pay later services into Apple Pay and Apple Wallets more broadly. So Apple and Goldman Sachs are both teaming up with Affirm. I mean, you don't get, there's few companies that Wall Street analysts respect more than those two. And if they're on the right side or they're on the buying side of the trade, it's a tough sell to be on the opposite side of that. But hey, make your arguments in the comments down below. Sleep apnea stocks completely plummeted for the session. ResMed and what's this company called? Inspire Medical Systems, both off roughly 20% as Eli Lilly is out for blood. Eli is here to take market share from more small competitors. Eli Lilly, for those that don't know, this is the largest healthcare company in the entire world. Basically what they did is they came out with a weight loss drug recently, and it turns out that this weight loss drug actually reduces the effects of sleep apnea by quite a bit. It really minimizes those effects overall. So companies like ResMed and Inspire Medical, they make these sleep apnea machines, and the market is like, yeah, you're completely fucked if, Eli Lilly is coming in here with a drug that's going to replace it. Obviously, everybody would just take that drug instead of using those absolute abomination birth control machines that you have to wear at night. Finally, we have NVIDIA. NVIDIA, been listening to a lot of DJ Khaled lately because the stock is suffering from success as investors start to take profits on this name. It was down 6.68% for the session, continuing its losses since Thursday. Since Thursday, the company has lost the market value of Walmart, or for another comparison, ExxonMobil, Visa, roughly in that territory of like 525 to 550 billion. An absolutely ridiculous fall from grace, but still, it's really just profit-taking. There was no news to be driving this at all whatsoever. So it's profit-taking and then momentum. And if it continues, then the SP is probably going to fall apart and we'll have a goddamn civil war. So let's all pray for NVIDIA and for our portfolios together, even though it's not in the WSO Alpha portfolio. We got some other semiconductor stocks that are in there, so go sign up for the portfolio to see all of that stuff. All right, let's move on into the thought banana of the day. This is the real news, or the one that I had the most fun writing about today. We are talking about the AI pincer move that is currently going on by OpenAI. For those that don't know, a pincer move is military strategy where basically you have like the enemy like formed up in their, they're in their units kind of like this. And the idea of the pincer is to be attacking the enemy from both flanks. Obviously, this is an old school military strategy. This would not, nobody would ever even think of doing this today. But the Athenians did it at the Battle of Marathon, and it helped them beat the Persians. And now OpenAI is trying to do that to the AI market to destroy every other company in the entire world. So Microsoft's subsidiary, because that's effectively what OpenAI is, just completed its largest acquisition ever. They bought a company called Rockset, which is basically, it's like a real-time analytics database provider. It's really good at handling unstructured, semi-structured, and structured data. So basically, the goal is to enhance OpenAI's abilities in real-time analytics and data handling, especially in the enterprise case scenario. So what's happening here is OpenAI is essentially developing large language models that can work for specific companies. It's supposed to be, seems like it's going to be like a turnkey solution kind of offering, like what C3 AI currently offers. But obviously, if OpenAI does it, it's probably going to ball all over them. So I asked ChatGPT to create an image of the deal to represent exactly what this means for the companies and the market opportunity, and this is what it came up with. I don't know, interpret it however you want to. It's basically a robot shaking hands with a man. It says OpenAI. It's spelled a bunch of words wrong. It says big data and AI all over the place. As fucking scary as the idea of AI is, if this is what it thinks images are or how you spell acquisition, I think we're in pretty good territory, pretty safe territory for the time being. But just to explain a little bit deeper, the notable thing about this acquisition is that Rockset is kind of a broad-based SQL database provider, so they're good with a broad array of different kinds of data versus something that would typically be like it's called a vector database, which is something that is addressing specific AI challenges, things like natural language processing and like image recognition and recommendation algorithms. It's like what TikTok uses to power their algorithm. So instead of purchasing something like that was really good at vector databases and just making a better and better large language model in the form of, what they've been doing so far from GPT-3 to 3.5 to 4, GPT Turbo to 4.0, which is basically what they've been doing this whole time. This is showing a horizontal pivot into the enterprise market. So OpenAI has been focused exclusively on consumer so far. Now they're going B2B as well as B2C. We don't know a whole lot about OpenAI's financials, but we do know a lot about its users, in that the company is, why isn't this changing? Yeah, that the company was the fastest growing product to 100 million users. We do not count threads here at the Daily Peel because that's bullshit. Zuckerberg obviously just used the Facebook audience to grow that shit, and I can't blame him. I would have done the exact same thing, but still, we don't count it for that reason. So OpenAI has been dominating the consumer artificial intelligence market. They earned about $1.6 billion in 2022, which was more than 10x from 2021, where they earned like a couple $1 million, something like 20, 30 million, I'm pretty sure. I wrote this morning, so I'm starting to kind of blank on the numbers that I didn't write about. But either way, they are expected to make $3.4 billion here in 2024, more than doubling once again, and largely because of this enterprise product. So OpenAI is using this pincer maneuver on both the enterprise and the consumer market. So, as if they weren't the leading AI company before, they certainly are now. C3 AI stock was actually up for the session. So maybe investors are kind of saying like there's room for more one player in this market, and the fact that OpenAI is getting in it is kind of a proof of concept for C3, but still, enterprise solutions. When you have OpenAI and Microsoft combined working on enterprise artificial intelligence solutions, I think we know who's going to win that battle. Let's finish up with the quote of the day from OpenAI CEO, Mr. Sam Altman, the creepiest man in technology. He once said, AI will probably most likely lead to the end of the world, but in the meantime, there will be great companies. Fuck yeah, it's going to destroy literally civilization, but, we're going to make a lot of money in the interim, so fuck it, let's just go for it, right? An absolutely ridiculous quote right there. There's some cartoon I saw out there on Reddit that shows something like that. It's like supposed to be these CEOs like testifying in front of Congress, and they're like, yes, this is probably going to lead to like unimaginable pain and suffering, but it's also going to lead to unprecedented profit. So, potato, it's kind of an even trade-off if you ask me. That's basically what Altman is saying right now. Obviously that is ridiculous. If this, I mean, whatever. I don't know enough about AI to be commenting on how it's going to destroy society, to be quite honest. We're going to call it for the day right there. It is now 8:02 p.m. I'm going to go watch The Lion King because I'm pretty sure that's what my dog is barking at right now. He really does not like seeing fellow animals on the TV screen, and I've tried to explain to him that it's not fucking real, and he's not a very good listener. So we'll go see if I can go figure that out. Sorry if you guys heard him barking in the background throughout this video, but for now, happy investing, happy trading, and I'll see you tomorrow. Bye now.